Okay, so let's just have a look at that stop loss principle again. What am I talking about? Well, what I'm talking about is basically putting in a stop loss at a clever point where the price shouldn't go if you're correct. And you can see in this diagram what I mean. Equally, you're looking to buy at a price level where the price hasn't been recently, but is likely to go if you're correct. And that's why you can see why the buy is where it is, why the stop loss is where it is. And that's how we make the decision on where we should put the buy and the stop loss if we're going to be clever. Now, most traders don't do this. Most private investors, that is, don't do this. Professional traders do. Okay, let's move on from that one and let's have a look at one where you can have a go. Where do you think you'd put the entry exit on this? We're looking at this side of the price chart. Where would you put the entry and the exit level? Just have a think for a second. Now let me tell you what the correct answer should be. The correct answer should be, well, first of all, you don't know whether the price is going to break beneath this support level here, or is going to bounce up above it. So is the price going to fall or move above it? Therefore, being a good trader and being indifferent to what the price does, what you will say to yourself is, well, if the price moves higher, maybe up to about here, then I'll look to enter. And I'll put a stop loss just beneath this point here, which is a point where the price shouldn't go. Equally, if the price falls down to here first, then I will look to short the stop and put a stop loss probably about here, which is the level it shouldn't go if it's going to continue falling. That's how you do it. Can you see the simplicity? Now, what else should we do as good traders? Well, we need to learn daily price patterns. That's the first thing. And these give us warning signs. They also explain to us why the stock is doing what it's doing and the reasoning behind it. What are some of the daily price patterns? Well, let's start off with wide-ranging days. You've got a stock which is moving higher. All of a sudden, it moves a lot lower, breaks beneath the previous day's low. Close is near the low as well. Do you see that? As well as the price breaking beneath a low. That to me is a pretty good, accurate warning sign. Doesn't mean I'm going to immediately sell. What it does is it's a warning. If I'm in a trade for the short term, maybe looking to hold for a week to 2 weeks, and it's near my target levels, I'm pretty happy. I might sell half my position or all of it. What about this? Upside reversal. Maybe I'm short on a stock or I'm getting ready to buy into one. So I'm looking when I should be waiting for a price rise. Well, you can see what it's done there. It's moved, most importantly, above the previous day's high, and also it's closed near the high. That's market psychology. The price has been moving in this trading range all day long, but what happens? When the last minute comes to buy the stock, everybody's willing to buy, and that's why it closes near that point. That tells you a good deal of psychology. Okay, let's look at another pattern, which is fairly predictive in my book, and which I think works very well indeed. And that's the open-close reversal. Again, it's a warning sign. Doesn't necessarily mean that I'm definitely going to get out or change my view. And you can see the point and the principle here. Price opens near the high after a number of days of uptrending. Let's have a look at that. It's had 1, 2, 3 days of trends. The next day in the morning, there's all excitement. Everybody wants to get involved in this stock. It opens near the high. And then what happens? The sellers come in. They push it lower and lower to the extent that it closes near the low for the day. Okay, closes above the previous close. That doesn't really matter so much, but it's closed near the low, and that's giving me a warning sign that watch out. Either maybe close a quarter of the position or half the position. Probably not all of it. I'd wait to see what happens the next day and whether the stock falls even further. Similarly, if I'm going short on a stock, it's moving lower, lower, lower. All of a sudden opens near the low. You think, yeah, it's another down day. Great, making more money on the short. What happens? The buyers come in. They say, no, wait a minute. This is getting too cheap. This is ridiculous. They bid it up. They knock it up higher and higher until it closes near the high. That's when you know that maybe it's about to change. Key reversal. Now look at this. Similar kind of principle. Another pattern worth remembering. Feel free to put pause on at any point. What happens with this? Okay, upward trend. Goes higher and higher and higher. Opens above the last close. Bang. gets pushed down by sellers. They smell blood, they see a great price to knock into. The buyers are sleeping, they're AWOL, they just don't have the money or the guts to keep on buying, and the sellers come in and you're left with the price falling lower, closes below the previous low. That's a pretty worrying sign. I'll be looking to maybe close half to 3/4 of the position there. Similar principle on the way up here. Down, 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 bang, up. Time to get out, or at least reevaluate. Let's just have a look at this. In reality, well, here's one position. You can see, here's another one. Do you see that? Bang, that happens. You do not want to be long, that's for sure. Even when this position occurred, you probably want to start thinking about exiting maybe half your position, take some money off the table. When it gets to this, A, you definitely don't want to be long. 2, you want to start thinking about shorting the stock, maybe £10 a point, something small, maybe £100 a point. It's at 540, you get out, maybe you then buy back, close the position at say 500 or 510, it's a 30 pence move, maybe it's £3,000 profit, it might be 300, depending on the size of the bet, the trade you placed. But certainly it's one well worth looking at. And here, similar story, you can see it here, then bosh, straight down. Now, if you just looked at these prices here, as many investors would, that wouldn't give you a clue. In fact, you might actually get very excited because you think, wow, it's made a new high for the first month or whatever. That are at this point, I want to buy some more stock, and that's probably what a lot of people would have done. But because you see this 2-day pattern, because you've looked at the CD-ROMs, you've read all of this, you know, well, actually, wait a minute, I want to get out. This is worrying. That's why you're one step ahead of the game, because you know the pattern. Similar story with Centrica over here. You see it run up, run up, run up. Great, fine, no problem. All the dumb money's in here at this point. People are thinking, maybe I want to buy even more. 155, fantastic. It's gone up from 120 odd to 155, loads of money. What do you know that they don't? Well, you know that that's a warning sign, and you might close some of your position. When you see it breaking below a support at this, you get out of the rest of it. That saves you a lot of money. Like I said before, trading profitably is not just about the money you make, it's also about the losses you avoid. That way, you kept onto a lot of your gains. Let me just give you a slight introduction onto what we're going to talk about next. We're going to talk about the momentum indicators, the ROC, the RSI, the MACD, which is the moving average convergence divergence. RSI, by the way, is relative strength index. The ROC is the rate of change, stochastics, and momentum indicators. Now, all of these are relatively straightforward. They have the same principles. That's why I bundled them all together and I just call them momentum indicators all in one. There's nothing too complicated about them. Initially, they can look a little bit tricky. They can look a little bit hairy, but trust me, they're not. In the next chapter, we're going to go into a bit more detail about exactly what they are and how they work.